Hey guys, this is Rudy coming at you from Palm Beach in Florida. Today I am wearing my Mr. Oxy hat because I want to talk a little bit about Occidental Petroleum and where to from here. It seems as if investor sentiment is overwhelmingly negative in terms of energy. So I thought, you know what, let's sort of explore and take a quick look at the macro, and then at the same time we can look more specifically at Occidental Petroleum. The other thing that I wanted to share with you is that I have been in touch with Occidental Investor Relations, and as you know by now, probably if you're an Oxy fan, that we're at the 2-year anniversary of the acquisition of Anadarko. And so I thought, as opposed to just giving you my opinion 2 years later, why don't we speak to Occidental Petroleum and see what they think of the Anadarko acquisition 2 years later. But first, before I get into Oxy, let's talk a little bit about what's in the news. So today is August the 14th. It is Saturday. A couple of days ago, on August the 12th, it would have been on Thursday, Forbes reported that suddenly worried about gas prices, Biden wants OPEC to produce more oil. You know, when I was a kid, my grandmother often used to say, "You just can't fix stupid." It took me a long time to figure out that she was actually talking about me. But in this particular instance, I can say you just can't fix stupid, and say to yourself, like, what on earth is the administration up to? I'm not a fan of government at the best of times, but this is just ludicrous in terms of what they were proposing. Well, in case we think Forbes is fake news, let's look at the actual statement by the National Security Advisor, Jake Sullivan, on the need for reliable and stable global energy markets. This is from the White House, so it is the actual source of the story. Basically what he says here is, while OPEC recently agreed to production increases, these increases will not fully offset previous production cuts that OPEC had imposed during the pandemic until well into 2022. At a critical moment in the global recovery, this is simply not enough. That prompted Governor Greg Abbott, Governor Abbott is the governor of the great state of Texas, to tweet and say, "Dear White House, Texas can do this. Our producers can easily produce that oil if your administration will just stay out of the way. Allow American workers, not OPEC, to produce the oil that can reduce the price of gasoline. Do not make us dependent on foreign sources of energy." So that is just that's just crazy stuff. It's almost as if the administration of the United States of America is working to have organizations like OPEC and inter alia countries like Russia, Saudi Arabia, etc., be in a better position as a result of their request for OPEC to increase production. It just doesn't make any sense. But anyway, like my grandmother said, you can't fix stupid. And like I alluded to at the beginning, most of the time she was talking about me. Occidental Petroleum closed on Friday afternoon yesterday at 26 bucks. It is still sitting left of center in its 52-week range. So I guess, you know, whether you're happy with $26 or not depends on a variety of factors, including why you're in the position in the first place. But at the same time, if you manage to get into Occidental at, you know, $10, $20, that will determine your cost basis. And if you bought it at $10 and you're up more than 100%, you're probably happy. If you bought it at $12, you're up 100%, you're probably okay. But if you bought Occidental at $56 a few years ago, you're probably not too happy with $26. So that pretty much just depends on the history in terms of where you're at and where you are in the position today in terms of your cost basis. At the bottom of the screen here, you can see that the institutions hold 64% of Occidental today, and the short interest is only 2%. So it's not too bad, you know, in terms of where we are right now. So let's take a quick sort of dive into Occidental's fundamentals, because as you know by now, I am a fundamentalist. And what we see over here is that If we look at quarter over quarter, the cash and short-term position of Occidental has improved dramatically quarter over quarter from 2 billion to 2.2 billion to 4.7 billion in the last quarter that they reported. So a nice cash haul. And then if we look at the current assets, a nice uptick as well from almost 9 billion to over 10, and now almost $13 billion in terms of total current assets. It is a significantly stronger position than what they were in before. If we take a quick look at the income statement, we can see in terms of the income statement quarter over quarter that the total revenue has jumped up from 4.2 billion to 5.3 and then just over 6. Now, of course, this is mostly to do with the increased price of WTI, which is not something that Occidental can control, but there's no question that Occidental is benefiting from this WTI price that's hovering around $70. Even after the recent pullback from in the 70s down to the high 60s, it's still at around $70, which is very good for Occidental. If we look at the valuation analysis of the company, and here I'm going to just share a few quick slides with you just to dive a little deeper. Because earnings are not available, the price to sales and price to book ratios are the most appropriate valuation measures. If we look at price to sales, what you have is a trailing 12-month total year of 1.22 compared to the industry's 11. So it's sort of in line or thereabouts. And then if you look at the price to book ratio for the most recent quarter, pretty much in line with the industry at 2.8 versus 2.8 for the industry as a whole. So in terms of where it is right now, it seems at a quick glance that Occidental is fairly valued with a price to sales ratio of approximately 1, if that is the metric that you want to use in order to decide what the value of the company should be. If we look at the profitability, you can see, as we probably know by now, that while Oxy does a better job than the median job converting revenues to profits on a gross margin basis, its operating and net margins are only on par with the industry norms. Now, of course, by now you know that Occidental is quite profitable in terms of a trailing 12-month gross profit margin year. It outperforms the industry very, very easily. But then as soon as you look at the operating margin or the net profit margin, it drops down to sort of more in the range of the industry median. And one of the reasons for that is Occidental's high debt ratio, which unfortunately has a very large interest expense attached to that, in addition to the fact that from a depreciation point of view, they have written down many impaired assets, which is of course not a cash entry, but it does impact the balance sheet. Occidental's current debt to capital ratio, talking about debt, is 66%, which is in line with the oil, gas, and consumable fuel industry. With an interest coverage ratio of 1.5 and a quick ratio of 1.15, the company should be able to comfortably repay its debt. This is a significant change from previous quarters. So this is as a result primarily of Occidental's better job last quarter at doing balance sheet repair. When we look at the quick ratio, down here you can see Occidental is 1.15 and the industry is 0.86. The quick ratio means that it has enough cash and cash equivalents on hand to cover its current liabilities, and more than 1 is favorable. So 1.15 is something we would like to see, and certainly something that I look at as one of my first points of call when I look at any particular stock. So the quick ratio is an important one to me. In fact, it is even more important than the interest coverage for the most recent quarter, which is also favorable, but lags the industry just a little. What else is happening at Occidental? So a few days after Occidental reported, Steve Chazen acquired an additional 20,000 shares at an average price of $25.76. So if you're wondering whether Oxy is a buy right now, one of the insiders, who's an informative insider because he knows more about the company than you and I, has just invested another $500,000 in Occidental Petroleum. In fact, $515,200 to be exact. You can see this on his SEC filing right here at the bottom. It says 20,000 shares acquired with a total cost of $25.76 per share. And he now owns almost 300,000 Occidental shares. So what's that? 300,000 times about 25, $750 million that Steve Chazin has invested in Occidental Petroleum. That is a little bit more than what I have invested in Occidental Petroleum, and probably a little more than what you have invested also. Let's look at a quick few slides on sentiment. Tip rank still ranks Occidental 9 out of 10. I'm in agreement with that. You can look at the different ratings that they apply in order to arrive at that smart score. Analyst ratings still a moderate buy, the average price target about 33. There's some insider activity. I just talked about that a minute ago. Hedge funds, we're going to look at that one in a minute. Of course, we know that shares decreased, hedge fund shares decreased last quarter because Dodge and Cox and ICANN sold some. There were a couple of smaller sales as well, but there were also a couple of larger buys. New sentiment is neutral. Investor sentiment, for whatever reason, is very negative. The positives, the technicals are actually positive and the fundamentals are negative, but that is over a 12-month period. It will look very different over the next 12-month period. The analyst price targets I talked about a minute ago is $33.27 on average. So there's some upside there. If you're interested in opening a position in Occidental at around $25, $26, you can expect it to hit 33. That's a realistic expectation. I think we'll see it at 33 again within the next month or two. 7 of the analysts say buy, 4 of them say hold, 1 of them says sell. Let's look at those hedge funds quickly. I'm going to ignore CSAT and Hussman because they are relatively small entries, but Joel Greenblatt from Gotham added to his position, and John Paulson from Paulson and Company added to his position as well. Quite a few million here, so 11 million by Joel Greenblatt and almost 80 million by John Huseman. And then there's a little one here from John Huseman, and over here we have Andrew Law added 44 million. That's a new position. So a couple of new positions, Hussman and Caxton. And of course, we know David Tepper is quite a large shareholder now. He added about 3.6% to his position. So guys, that's kind of sort of a brief overview in terms of where Oxy is and where it's going. If you ask me where it's going, I've said during this presentation that I expected to see it sort of in that analyst median price of around $33 within the next couple of months or so. I don't expect Oxy to bounce and suddenly go to $40, $50 per share. Of course, that could happen. If Oxy has another good quarter like the one that they just had, it could be good for us as investors. But either way, for now, Occidental remains one of my largest energy holdings in my portfolio. And I am confidently holding that position. I'm not buying more at 26 bucks, and I'm not exiting the position either. I'm just holding and seeing where it's going. If you had been following this channel for some time, you'll know that I've spoken on as Occidental as one of my sort of medium-term 3 to 5 year stocks. I've been in the Oxy position now for close on 2 years. It's the 2-year anniversary date on Anadarko. But yeah, close on 2 years. You know, I review it all the time, and I look at Oxy much like you do, probably every single day. But that's where I'm at. Hold. So that's what I'm doing. If you think differently, let me know in the comments. Thank you for watching. Thanks for spending time with me, and I'll talk to you soon. By the way, the next video is coming up. Is going to be a review of the 2-year anniversary of Anadarko's acquisition by Occidental Petroleum. Talk to you soon. Bye.